Today, I'm going to tell you about the different loans that are out there and how you can use them to your advantage. Hi, my name is Gustavo Larrea. I'm a real estate agent in Long Island. And today we're going to go over the different types of loans that are out there. We're not going to go over everything. It would make the video incredibly long, but we're going to go over some of the most common ones and some of the most common questions that I get asked. So let's get started. Okay, so the first type of loan we're going to talk about is called your FHA loan. All right, this is Federal Housing Administration loan. All right, basically it's designed for first-time home buyers. This is going to allow you to buy your first home and take advantage of putting in a very low down payment. So basically, an FHA loan is a government-backed security. All right. This means that if you default on the loan, the government actually will reimburse the lender. All right. So this is a very popular one, and it's popular because of the single fact that you can put a very low down payment, as low as 3.5% on the loan. So for first time home buyers, they just want to get into that home. Ownership is the American dream. And, this allows them to do it without putting a ridiculous down payment, 20%. Oftentimes, lenders will tell you that 20% is what you got to put down. And that's just not true. You could put as low as 3.5% with an FHA loan. You only need a credit score of 580. And most people that I've worked with in the past, that a lot of people have tumultuous credit. So this actually helps them out. So long as you have a score of 580, you're going to be able to get into this loan. You could put in 3.5% and get yourself into a really good home and start shopping. Okay, so the next type of loan we're going to talk about is the VA loan. All right, this is the veterans loan. Right, obviously you have to be a service member or former service member in order to receive this loan. I think this is one of the most wonderful products that is available for servicemen that go out to war. I believe that they, should get advantages for that, and all about supporting the troops. So basically, with a VA loan, all right, it's probably one of the best loans to have because you can actually put 0% down on a home. And this is also government backed. It's a wonderful product for our veterans that, go to war and come back and are looking to, start their lives in the civilian world. And this helps them do it. Now, with these loans, there's an upfront funding fee that's actually built in to the actual mortgage. And this way you don't have to pay PMI. Okay, before we move forward, if you're finding value from these videos and you like the content that I'm giving you, please press that like and subscribe button. It absolutely helps the channel, helps me to make more videos, and I appreciate the support. Thanks, and let's move on. All right, so the next type of mortgage we're going to talk about is your conventional loans, all right? So usually you have a conventional loan, it's probably about 30-year fixed. You need at least a minimum credit score of 620, and you need to put down a certain amount on that. It's not going to be 3.5%, but I've seen people put as low as 5%, especially if they're buying a nicer home. So this is one of the better ones to have, especially in terms of negotiating. Um, when you have a conventional loan, it's not backed by the government. So you are going to have to pay private mortgage insurance, which is PMI, and that will be added to your rate. But generally, when going into an offer, the sellers like to see the conventional. They like to see 20% down. And as far as terms go, this is always going to be, one of the better ones to have as far as, leveraging a deal and getting, the best the best chance to get your home. All right, so the last one we're going to talk about today is adjustable rate mortgages. And basically, adjustable rate mortgage, it allows you to get into a home at a lower rate in most cases. However, the key word here being adjustable, every 6 months to a year, that rate could move up or move down. All right, so again, it adjusts in comparison to what's going on in the market. Now, this works good for some people, but for your average, first time home buyer, anybody that's just looking to get into a home, your average, person looking to get into a home, I usually steer them away from this because especially like right now, rates are going up and down and we really don't know where they're going. So I always say, you know what, just go in right now, go in at at a fixed rate mortgage, right? Because there's, fixed rate, which is all the loans that I talked about before. All right, and then you have your adjustable rate. Usually I want to put them in at a 30-year fixed rate, and this way they're protected and they're not going all over the place and potentially cannot afford the payment on their home. Okay, so in ending, basically, there's a lot more mortgages, lots of different types of loans. If you're buying a fixer upper, you could do a 203k loan. I mean, there's so many loans out there. It really just depends on your situation. I just went over the most common ones. But that being said, figure out what you can do, figure out what your budget is, what type of home you could afford. And really, you want to talk to your mortgage lender about this. They'll be able to tell you about closing costs, what everything's going to end up costing you at the end, what your payment's going to be monthly, and how much you can negotiate as far as these things go. So, figure out where you're at, and then from there, your mortgage lender will find the right loan for you. Thank you so much, and we'll see you next week.